children. This is another video on trial balance. So as you must have seen the earlier videos, and I do not presume things, so I have put the link in the description box below so that you can just go and have a look at it, so that you have the basics here of the trial balance before we do this sum. Again, this is a very simple sum, simple topic, no issues. We are doing question number 9. We are referring to D.K. Goel, and I have also put in the clip of the picture of the sum here, so you can just refer to it. So now this is the sum in front of you. Now we have been told to redraft rather, the trial balance correctly. So sometimes you might be given not just a list of ledger account balances, you might be given a wrongly prepared trial balance. Okay, wrongly prepared or rightly prepared, it doesn't make a difference for us, right? We just need the amounts and the ledger account names. That's it. We will obviously, we are expected to know which account is to be going to the debit column and which one to the credit. So even if it's a wrong trial balance is given, it's not too much of an effort. We just pick up the amounts and put it in the right place, and our trial balance should tally. So let us start with this. Stock on 1/4/2017. This is the opening stock. So stock on 1/4/2017. This we are making on 31st March, the trial balance on 18. Therefore, this is the opening stock. Opening stock we discussed is an expense for us, and that we put in the debit column. What is the rule? Just to reiterate, rule is put all the expenses and asset balances in the debit, because they all have a debit balance. And what about liabilities and expenses? Yes, they will find a place in the credit column because they all have a credit balance. Is that correct? Is that okay? So now, going back to it, purchases. Purchases is given as 6,50,000. So obviously it's an expense, purchases, so we put it in the debit column. Sales. Sales is an income for us and should be credited. Till here, see your trial balance shows no errors at all. Then we have motor vans. Motor vans is a fixed asset, so that should be debited. Motor vans, 3,80,000. Next, debtors and creditors. Both are given here, children. Debtors and creditors. You all understand that debtors are assets, should be debited, put in the debit column, and creditors are liabilities, so they will find a place in the credit column. We have two amounts here, so we assume that this is correct, since we have not been told that, in some sums you might be told that debtors and creditors amount have been interchanged. Interchanged meaning debtors have been put in credit column and creditors have been put in debit column. So how would you rectify that? Just simply switch the amounts. You will put the credit column amount in the debit and debit column in the credit. See, it's all manual errors that happen. Okay. Then we have premises. Premises is, what is the meaning of premises? Meaning the entire campus, the building, the land, everything attached to the campus of the business, where the business, place of business. Obviously, there's an asset for me. See, here it is given 3 lakhs on the credit column. So here is one mistake we have found out. Premises being an asset should be in the debit column. Then we have shop fittings again. Shop fittings. This is again something related to my building and other furniture and fitting. Again, it's an asset to me. Why have they taken in the credit column? It's neither an income nor a liability. Interest on bank overdraft. It is given on the credit side. Interest on overdraft. Overdraft we have already come across in cash book. Overdraft means something that you have taken is like a short-term borrowing for the business. Obviously, the company will not earn, the business will not earn interest on that. It will have to pay interest on that. Just like you pay interest on loan taken. Correct? Therefore, it's an expense for us. Interest on bank overdraft. See, it's an expense for us. So 16,000 should be in the debit column and not in the credit column. Purchase return. Purchase return. You all understand that purchases has a debit balance. Purchase return is the opposite of that, has to be in the credit column. They have taken in the debit column. Wrong. See, that's how you need to know where it has to go. That's it. Sales return, 20,000. Sales return, opposite of sales. Sales is always an income, a credit, and sales return is debit. So, debit sales return, 20,000. Lighting and heating. Lighting and heating is usually a factory related expense. So, expense 18,000. Correctly put there. So, we copy it here. Then we have capital of 5 lakhs. Capital always credit. It is the primary liability. Discount received. Discount received. Anything received is an income. Yes? So income should be credited. 2,000. Why have you taken in the debit column? Obviously prepared by someone who hasn't learned accounts well. So I'm sure you don't want to follow his suit here. You all will be doing good in accounts, so therefore learn accounts properly so that you don't go wrong like this. Somebody else is correcting the trial balance prepared by you, right? So you please learn accounts properly. Repairs. So repairs is an expense. All expenses in the debit side. 2,500. Electricity. Electricity is also an expense. 6,500. No need to put in the credit side. Bank overdraft. Bank overdraft, I told you it's a borrowing. Anything that you borrowed has to be repaid, therefore it's a liability. Bank overdraft, 2 lakhs. Okay. Then, stock on 31/3/2018. This is closing stock, children. Closing stock, you need to understand that closing stock will appear in the trial balance only and only when it has already been adjusted. Adjusted against what? Purchases. Okay. Now I'll be coming to this. I'll be dealing with this after I finish the sum, because this needs us, a little bit of understanding. Okay. For the time being, you will just not take this closing stock in the trial balance. Rent from subletting. Rent from subletting. Now first thing, rent from meaning you are receiving rent. Subletting meaning your premises, your building or your area, you have given someone else to occupy and do something. They are paying you rent, it's an income for you. Okay, so rent from subletting is an income. Please remember that. Therefore, 15,000 on the credit side. Then, bills receivable. Bills receivable. Bills receivable meaning an asset. You will receive amount from these bills. Okay. Bill receivable is an asset. Bills payable is a liability. So this is a current asset which will obviously be debited. Now suspense account being difference in books. Now difference in books. You all know that if you have passed all correct entries, your debit will be equal to credit. But this fellow who has made the trial balance has made errors. He's put debit amounts in credit column and credit amounts in debit column. Obviously, his trial balance would not have matched. Therefore, he might have opened a suspense account. Maybe there's originally no problem when we just total this up. So we will what we will do is we'll try to total this up. If at all this doesn't match, then we will use a suspense account to tally it. Suspense account is usually used when the trial balance does not agree, meaning debit is not equal to credit. So kya kare? Quick fix solution. Okay, let us put this amount which we don't know why it is not tallying. It should be tallying. Double entry system, debit has to be equal to credit. But since we do not know, we will have to check the book. There might be certain errors. We might have missed some posting, missed some entry. Maybe because of that this error is there. So unless that is discovered and rectified, there will be a difference in debit and credit total. Right? So for the time being, we will use suspense and tally it if at all it doesn't tally. Right now, we don't need to put this amount here. Okay? We will not put this amount. We will ourselves check the trial balance and then. So before that, we will just quickly check whether we have put all the amounts or not. Stock, purchase, sale, motor van, debtors, creditors, premises, shop fitting, interest on bank OD, purchase return, sales return, lighting, heating, capital, discount received, repairs, electricity, bank overdraft, stock we have not taken, rent from subletting and bill receivable. Good. So let us quickly total this up and check. Okay. So now if we see this, the total on the both sides is coming to sum 18 lakhs 21,000 on both sides. Okay? Without taking into account any suspense. It's tallying. We've just put the correct amount in the correct place and it's tallying. So do we need to balance it? No. It's automatically tallied. So we don't need any suspense account to make it tally. Clear? So done away with suspense account, and that is the end of your trial balance. You will please write here total. This is your total of trial balance. So clear about this, all expenses and assets here, income and credit liabilities here. Fine. So now let us talk about one concept which we have just touched upon, which is closing stock. Okay. So closing stock. Suppose a business has purchased, okay, and therefore put in purchases account rupees 50,000. This is during the year. During the year, the business has made purchases of 50,000 worth of goods. Obviously, it has purchased to sell, right? Now, suppose it could sell goods worth 48,000. Fine, sold. But that means 2,000 worth of goods is still left, and that is what is your closing stock. Stock meaning inventory. Okay, whatever goods are still with you at the end of the year, 31st March, that is called your closing stock. What is closing stock for you? What will you do with this closing stock in the next year? This year we are closing the books because we need to find out profit or loss. Remember this, okay? Now, closing stock, since the 2,000 ka goods we have not sold, we will be selling it in the next year, right? Now, what does our matching concept say? We are trying to find out profit of this year, so income of this year should be matched with the expense of this year. Obviously, right? Sales income. Now, I have sold goods worth this much at whatever price. Maybe I have sold it at 65,000. Goods costing, these are all at cost. Goods costing 48,000, I have sold at 65,000. This is at sale price. Okay. So if I am just taking only these into account, what is my cost of the goods that I have sold at 65? 48,000. So I will subtract from this and then I will find out the profit. 65,000 minus 48,000 is my profit. That is coming to say 17,000. Okay. 17,000 is my profit. But suppose I do not subtract this 2,000. I say my purchase is 50,000. Sales minus purchase is profit. If I say that, then what will I do? 65,000 minus 50,000. So 15,000 will come as profit. Now you tell me which is the correct profit. Did I sell goods worth 50,000 that I am matching income and expenditure? It's mismatch. This 50,000 is not gone. Out of this 2,000 is there with me. Closing stock. How can I subtract that from sales? I did not sell that. How can I match this? Yes, isn't it? So here we are trying to match kitne ka goods. I have sold at this much. Therefore, for finding out profit, we need to adjust the closing stock. Adjust means subtract from purchase. Subtract from purchase closing stock in order to find out the actual cost of the goods that we have sold. Okay, not the total purchases. Okay, therefore we need to minus closing stock. Now, what is the thing with the trial balance telling me? If trial balance tells me, forget about all this now. Okay, you've understood why we need to subtract closing stock. So in your trial balance, when we are making a trial balance, suppose you have been given purchases. Same example, 50,000, that is what is your purchases. And also you have been given closing stock 2,000. Okay, 31,380. So is it correct? ये 2,000 आया कहाँ से? This from this 50,000. I am counting this as also an expense and also this. I am counting it twice as 52,000. There is no 52,000. It is actually 48,000 of purchase. This is wrong. Okay. Actually, it is 48,000 of purchase, and then from there we are getting this closing stock. Isn't it? Therefore, if it has not been subtracted, closing stock, can I take it in the trial balance? I cannot. Either I have done this. This is called adjusted purchase. Adjusted purchase meaning closing stock has been subtracted from it. Therefore, I can take closing stock in this case because this plus this is 50,000, which is giving me the total purchase I get. But यहाँ पर क्या है? Purchase also I am taking and closing stock also I am taking. I cannot take both because the total will come to 52,000, which is wrong. Therefore, in this case, I cannot take closing stock. I will just take purchase to my trial balance. As it is given, closing stock has not been adjusted. Understood? So, unless and until it is said that closing stock is already adjusted, do not take in the trial balance. Bas, itna hi funda hai. In the next video again we will do more of this and some other little tricky things in the trial balance. Okay. So till then keep practicing the simplest of way with me. Take care children. Bye bye.